Let's get ready to mortgage. He is the prince of programs, guru of guidelines, master of matrices. He puts the fun in funding. Please welcome Mark, Mr. Mark-eitel.
All right. My name is Mark-eitel, and you are listening to the Mr. Mortgage Show, and you are in the right place if you have questions and you want answers. I'm thinking of that movie, what was it? A Few Good Men, I think it was. Tom Cruise and Jack Nicholson. You can't handle the truth. We'll give them the truth. We'll give them the answers to your questions. But you're in the right place if you have questions regarding real estate and mortgages. You want the inside information, not just the headlines. You want the real data. You want the tips, the tricks, the strategies that you need so you can go out there, navigate this crazy real estate market and make better decisions for you and your family. That's why we're here. Dom is with me again this week. We do it every week right here, same time, same station. And you hear me talk about your questions. If you have questions and you want to get them on the air, you can call or text the Anytime Hotline, which is 855-462-7292. Write that down. Somewhere important, so you don't forget it. 855-462-7292 is the Anytime Hotline. And again, you can call or text that number with your questions. But guys, we're going to dive right into this week's show. We've got a great one lined up for you. I've got an array of headlines laid out on the desk in front of me, and they all tell the same story. And what's that story? My God, the housing market is going to crash. The end of the world has arrived. Well, sit tight, everybody. I don't think that's the case, and I'm going to tell you why. But let's dive right in. So I pulled a bunch of headlines from the internet this week, and, you know, all the usual suspects, none of them disappointed, whether it's Housing Wire, CNBC, Forbes. Everybody has their version of what's happening in the housing market. So the first headline is mortgage demand falls to the lowest level in 2 decades as rates hit 16-year high of 6.75%. Well, they did hit 6.75% and they breached 7% for a minute and they pulled back into the sixes, but they've been bouncing around in the sixes for a while and we've seen them touch 7 a couple times. So that old 2 and 3% rate of the past is like the distant love. Maybe you can still smell her perfume on the pillow, but she's long gone, guys. We are in a whole new world and have been for a while. Here's another one that says U.S. home prices are falling at the fastest rate since the great financial crisis. This is a Black Knight data set. And that one really got a lot of attention this week because from June until July, the median home price slipped just over 1%. I think it was like 1.03% from June to July. And then the July to August number fell 0.98%. So let's call it 2% during that 2-month swing. Now, that is the largest decline on record since the early 2000s and the whole housing crisis. And everybody is looking back to that as the most recent reference in their mind. But guys, there's so much that's different about this market that when we see these references to the recession or the housing crash, I'm not, buying into that so quickly. But when we dig deep into the data, there's some interesting things I want to point out. And none of this is arguable. These are all facts. And I'm not here to sell you, unicorns and rainbows and sunshine. That's not at all what the purpose of this show is. The purpose of this show is to give you the information beyond the headlines. So, we're all out there navigating our individual worlds, and we're doing it based on our own accumulation of data. And I'm trying to give you the data behind some of these headlines that have everybody convinced the sky is falling. But here's the thing. August 2022 versus August 2021, we're still darn near 14% year-over-year appreciation. And we're holding strong at 40% appreciation since 2019 before the pandemic. And, the pandemic changed everything because of the economic response by the government, both administrations. A lot of money came into the market, which forced interest rates down. And we can turn this into, economic psychobabble if you'd like. Just, call or text your questions in and we can go down this rabbit hole. But my point is, in reading the data, so we're still 40% appreciation locked in since 2019. We're still year over year nearly 14% appreciation for August year over year. But here's the interesting thing. This article that I'm holding in my hand, and I'll publish this to the Facebook page, and I'll share that here in a minute. But the data suggests that annually housing prices slip at the end of the summer anyway. Because now, granted, this is a larger than normal slip, but we're talking about single-digit percentiles, or in this most recent report, less than 1%. But here's what happens. Usually the larger, more expensive homes sell in the summer between school years because people don't want to pull their kids out of school midterm and put them in a new school. The lesser expensive homes typically sell through the fall and winter months. It's just that's historical data. Those homes always trade because there's more demand in a lower price point. So some of the data in this article suggests that this is just the natural effect of the normal annual housing cycle. Typically, prices slip little bit. And what I mean by slip, I'm not talking about that house on the end of the street is suddenly selling at a discount. What I'm suggesting is this data is suggesting these are median home prices nationally. There's no calculation in here to determine whether we're talking about 4-bedroom, 3-bath homes with a pool and a golf course view, or we're talking about 1-bedroom, 1-bath condos. It takes everything into consideration, lumps it all in one big pile, and then picks the one in the middle. That's the median. So because of that, when higher valued assets trade, and this is true of anything, the median is skewed up. When lower priced assets trade, the median is skewed down. Now, I'm not suggesting that this isn't something that we should all pay attention to. This could be the sign of discounts to come, but at the moment, we're not seeing significant slides in prices, and there is some data to support that this may just be the natural effect of the annual housing cycle. But guys, we're going to watch it closely because every week we're going to bring you the real data. But I just wanted to throw that out there because as we're reading through it, it goes on to suggest that very fact. And then it talks about big price gains are holding up in the Florida markets, which continue to see strong demand because the shift in many tech workers from Silicon Valley to the Sun Belt during the pandemic. We're still seeing that. And then lastly, I want to share this, and I can't share this enough. You've heard me say it before, and you'll hear me say it again. Supply and demand. And right now, there's just not supply coming to the market. Now, we are seeing the effects of higher interest rates cooling demand, right? There's less people. Every time that interest rate ticks up, less people that are running out there to buy a property. But here's the thing. We're still seeing fewer properties come to the market, right? And my personal belief, I've shared it before, and I think we're going to see it play out, that these higher interest rates are also going to lock up some of that inventory. And what I mean by that is if you're sitting at home right now with your cup of coffee and your plaid bathrobe on because it was nice weather this morning and your feet are up on the ottoman and you're sipping your cup of coffee out of that world's greatest dad or world's greatest mom mug, and you've got a 2% interest rate and a ton of equity in your house, you're probably not running out there thinking this is a great time. I'm going to sell my property that I've got all this equity in and go out there and buy a more expensive property because your house today is more expensive than when you paid it, when you purchased it. So you're going to, even a lateral move is going to cost you more money. But my point is, you're probably not wanting to run out there and get a 6.5% or 7% mortgage. Because you are sitting fat and happy right now. And if you are, congratulations, because you made some brilliant moves over the course of the last couple of years. But because of that, I think that's another pressure point on supply. And we've talked about it also that the senior community typically will sell and downsize or sell and move into assisted living. And guys, we all know it. And if you're in that senior population, most of us are living longer and healthier than we ever have before, and we have no intent of moving until the very last minute. And we're even seeing an uptick in reverse mortgages because people are wanting to sit tight in that happy home, and they don't need the assisted, they just want to keep the living. So, guys, I think for the moment, right now, supply is still under pressure. There's more demand, and because of that, I think housing prices are supported at this level, especially in the Sunbelt areas. But that is the opinion of one man. Probably not just one man. There's probably a lot of us that think that way. But anyway, you hear the music. You know what that means. That's my cue. We'll be back into Sit Tight for 2 short minutes. On the other side of this break, we're going to dive into your questions. It's not every day that you need an appraisal, whether it's for a divorce settlement, estate planning, or maybe you're appealing a tax assessment, or you just want to make sure you have adequate coverage in your property insurance. When you need a certified appraisal, turn to my friends at SOFLappraisal.com. That's SOFLappraisal.com. Peter and his team have been appraising properties here in South Florida for decades. SOFLappraisal.com. And tell them you heard this on the Mr. Mortgage Show.
Here's another 5-star review.
My wife and I own a small business. And the way our accountant filed our taxes, we don't show much income on tax returns. Because of this, it looks as if we don't make the money. This was a problem for our bank when we applied for a mortgage. But not for Mark. He verifies our income by using our monthly bank statements. Mark and his Mr. Mortgage team made a big difference for me. Yes, I am happy to recommend Mr. Mortgage Mark.
Hey, it's mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is mark-eitel, and you are listening to the Mr. Mortgage Show. And Dom, my producer, and I do this every week right here, same time, same stations, and we certainly appreciate you being with us. And guys and gals, if you have questions, call or text those in to us at 855-462-7292. That's 855-462-7292. That is the Anytime Hotline. And if you're unable to shoot your questions in while we're live on the air, shoot them to us anyway, because that forwards to my office during the work week. So we'll at least be able to answer your question. And if it's a good one, we may even save it until next week, because we have been known to do that too. So 855-462-7292 is the Anytime Hotline, and that is the answers, or the answers to all of life's mysteries are on the other side of that number. So we certainly appreciate and encourage your participation. If you want to do it the old-fashioned way, go to the website. It's mr.mortgage, never a .com. Just go to your address bar, type in Mr., hit the little period, mortgage, hit enter, and we'll pop right up. That's Mr. Mortgage, no.com. But guys, we're going to dive into your questions. There are some that have come in. I talked to Dom during the break. But hey, I heard that spot at the end of the break for the reverse mortgage, moreaboutreverse.com, where you can go get a little more information. And I don't know if you remember this, but over the last several weeks, I've mentioned that we're putting together an in-person speaking series where we're coming out and doing a Q&A regarding reverse mortgages. And Thursday night, I was able to do the first of those, and it was a wonderful night. We had some really, really good questions. And we had a group of about 28 people at the, oh my goodness, it's Nova Southeastern University's campus up in Palm Beach Gardens, Jupiter area. We had a room there, and we were able to do about a 2-hour Q&A. There were some financial planners there. But anyway, a lot of fun. So if you have any interest in being a part of that and having your questions answered in person, we're going to be making the rounds all up and down the coast. But you call us up, 855-462-7292, and we'll put you on the guest list because that was a lot of fun last night. But hey, we had some good questions last night, and I'm hoping to get some good questions now. So I know Dom is giving me the indication, and I won't tell you how he's doing that. There is a predominant finger being held up and pointed at me. I'm either number one or he's upset with me, but I'm going to throw it over to him so we can get to questions.
Carl is asking, how does seller financing work? I'm looking at a house and the seller said with a 20% down payment, he will hold the note. What does this mean?
Hey, Carl, that is a great question. And wow, certainly a wonderful opportunity. Seller financing is always a great option if you are currently not mortgage ready for whatever reason, right? Maybe you just started a new job and a new career and you don't have enough history there, or you need some time to work on your credit. But it's a great option. And sellers like it sometimes too, because they can defer their gains and they can also maintain some cash flow. And flashback to last night for a minute, as I mentioned, that was a financial planning seminar that I participated in. They were stressing the difference in value of an asset versus cash flow. And you could have, $1 million asset, which is, awesome on paper, but if it's not generating cash flow, it may not meet your need at a certain stage in life. That cash flow piece may be more important. And sometimes sellers are in that same boat. They're thinking, okay, I don't necessarily want to realize that gain right now. I'll keep some cash flow coming in the form of a lease option or in the form of seller financing, and they may be able to structure it so they're putting that gains off for the future when they may have some losses to write off against it. But that was a bit of a long-winded rabbit hole I went down. To answer your question, typically what happens is the seller you'll draft a mortgage document just like you would with a traditional lender and a note, and you'll sign that. He's now or she's now the lender. And you'll want to make sure that that's recorded, like a normal mortgage would be, that you want the transaction to be facilitated the same way. So that 20% down payment will typically go to the title company or title attorney, whoever's closing it. If you guys don't have a title company that you're leaning on right now, I'll be happy to get you in touch with a great one. And once that's done and your deposit's in escrow with the title company, then the mortgage note is drafted, and then you make your monthly payments to the owner, who's now the lender in this case. You own the property as you normally would. They have a lien position in the property. But great question. I hope that helps. If you want to, go a little bit deeper, I encourage you to give us a call off the air. But it is a legitimate way to buy and sell real estate, and we're starting to see a little bit more of that right now because these sellers can hold the note and get a larger interest return because rates have crept up, and it gives you time to get mortgage ready. So not a bad option by any means. Lease option works basically the same way, except ownership doesn't actually transfer and no notes record. You just have a lease with an option to buy, but I'll be happy to walk you through that too. So I appreciate the question. Let's keep them coming. Hey, Dom, what else do we have?
Michelle sent an email. My landlord just told me he's increasing the rent $250 starting in January. I've got to get out of here. How long does it take to get a mortgage approval?
Hey, Michelle, I appreciate that question. No surprise there, right? Because that is one thing we've seen so much of in the last 2 years, the rent increases. They're even outpacing the cost of home ownership increases with the prices and interest rates in some markets. And I commend you for being ready to jump in and buying something, because had you done it 2 or 3 years ago, not only would you have accumulated, significant equity, you'd still have that same payment that you had 2 or 3 years ago. And that's one thing that we often overlook when we're thinking of buying real estate. We think, it's going to go up in value. I'm going to make some money. That's awesome. When it happens, and if it happens at the pace that it has of late, then that's really awesome, because my God, it's been scorching. But one of several benefits is the fact that you've stabilized your monthly living expenses, because a fixed rate mortgage doesn't go up. Now, granted, taxes and insurance can go up a bit, year over year, but they're not jumping like these landlords have been increasing rent. So to answer your question, you can get your approval in as little as 48 hours. It really has more to do with how quickly you can accumulate your documents. So you can get a pre-qualification in, minutes. You jump on the phone and you're disclosing how much money you make. The lender may or may not even look at your credit score. They just may take your word for it with a pre-qualification and say, okay, based on this income and this debt and this, presumed credit score, you could qualify for, around X. But to purchase something right now, sellers are still wanting bona fide approvals. And, those can be done same day if you have all your documents in order and you're ready to submit them, because a full credit evaluation's done, a full income verification's done, all assets are verified. So all of that being said, I encourage people to allow, somewhere around 48 hours. But if you're in a pinch and you've got all your documents together, we do them same day often. But with all of that information and that full review of credit, income, and assets, you can actually be run through and I don't mean, it sounds like I'm dragging you through the ringer. Your information is actually submitted into the underwriting software and a full-fledged approval comes back. And with that approval, it can be submitted to any Fannie Mae or Freddie Mac lending channel, and you'll qualify for a mortgage based on those findings. So that's as good as, well, I was going to say it's as good as cash if you're, a seller and a buyer comes to you, but the property does still need to appraise and the property needs to pass the inspection, but you have no worries at that point if your borrower is creditworthy. And if you're the borrower and you're submitting what's called an AUS approval, then you're ready to rock and roll, and you can pull the trigger on something. And you've heard me say it before, you don't go to the mall without your credit card, you don't go fishing without your bait, and you don't go hunting without the gun slung over your shoulder. You should approach purchasing a house the same way. Get yourself ready so you can go out there and negotiate from a position of strength and just tell the seller, hey guys, hey gals, we're ready. We've got our approval. We've been run through the underwriting engine. All we need is to plug the property into the equation. But fantastic question. I commend you and encourage you to jump out there and become a homeowner. So you hear the music, you know what that means. That is my cue. We'll be back in 2 on the other side of this break. There will be more of the Mr. Mortgage Show.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes, I'm happy to recommend Mark and his Mr. Mortgage team.
Hey, it's mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
It's not every day that you need an appraisal, whether it's for a divorce settlement, estate planning, or maybe you're appealing a tax assessment, or you just want to make sure you have adequate coverage in your property insurance. When you need a certified appraisal, turn to my friends at SOFLappraisal.com. That's SOFLappraisal.com. Peter and his team have been appraising properties here in South Florida for decades. SOFLappraisal.com. And tell them you heard this on the Mr. Mortgage Show.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right. My name is Mark-eitel, and you are listening to the Mr. Mortgage Show. And you heard Ike, our announcer. You can call or text. He always leaves that off. We've got to slap him around a little bit. Actually, we don't want to slap Ike around at all because he's as big as his voice sounds. But you can call or text that number, 855-462-7292, 855-462-7292, or visit the website, mr.mortgagenever.com. Just type in Mr.Mortgage, and in the upper right-hand corner of the page is a Contact Us box, and you can type your question in there. And Dom, the incredible producer that he is not only running the board, he is manning the hotline. He's looking for your texts. He is looking for your emails, and he's actually got his head out the window looking for the pizza guy. No, it's too early for pizza. I'm kidding. But I'm going to throw it over to him because I know we've got some questions, and I think this is a good one because I was peeking over his shoulder.
Pauline sent a text. Here is a crazy question. I'm trying to buy a property that is zoned A1. My bank says they can't do a mortgage because the current owner teaches riding lessons from the stables and rings on the property. They say it's a business, but I'm not buying the business, only the house. Can I get a regular mortgage?
Wow. Okay, let me digest that, Pauline, because I didn't read the question. I just saw there was a lot of writing when I was looking over to Dom's shoulder, and it was a big question. So here's the thing. Yes, to answer your question, yes, and yes. You can get a regular, normal mortgage on the property, assuming a few things, right? So I would need to know a little bit more, but I'm going to make some assumptions because there are, a lot of people out there listening, and this may or may not apply to somebody else. So you mentioned riding lessons, and there are riding rings on the property. So, my mind instantly goes out to some of our equestrian communities in the polo areas where, we're looking at a 5-acre property and they've got a dressage ring set up and they're training and teaching. But it's a residential property, right? There's a house on the property. The primary use of the property is residential purposes. If that's the case, then the riding lessons part of the equation, first of all, it's not uncommon, right? We've got people who live on the water who have several docks behind their house, or at least room for, more than one boat, and they may rent out space for other boats. It happens all the time. You're renting 2 or 3 slips out, and you're supplementing your income, sometimes by thousands a month. Well, it's no different in the equestrian community. Sometimes they'll rent the stables out to other horse owners. And, I've seen properties with 16 and even more stables on the property. And then it's not uncommon for training to occur on those properties as well. All of that being said, if you're buying the home, right, and it's not uncommon for properties in that area to have, riding facilities and stables and barns, then you can qualify for a normal conventional purchase mortgage as long as there's been no value in the appraisal applied to the business portion of it, right? Think of somebody who, prints T-shirts in their garage, and you Google the address and it says, Mike's Crazy T-shirts at 123, Banana Street. He's running a business from his home, but it's a home. It's that may be a very vanilla example, but you get my point. It's a home, and the owner is teaching riding lessons. And I might be wrong, but these are my assumptions because we've seen this almost identical scenario play out in our local equestrian areas here. So if the appraiser has not applied a value to the business component of the property, and you're not buying the business, so you could write a simple letter of explanation that, you're not going to be teaching riding lessons. You're just going to, keep your horses boarded there, and the appraisal is not taking any of the business income value into consideration, then you should be fine. It's not uncommon for a lender to get wrapped around the axle with that A1 zoning because that's an agricultural zoning. However, as we all are aware, there are many, many homes that are in the agricultural areas. And, right away, depending on the price point, this may qualify for a USDA purchase, but the USDA loan limits are low by comparison of some of the sales prices of these type of properties. But if it's within the USDA loan limits, then it would qualify anyway. You could buy it as a hobby farm. But I would love to learn a little bit more But let me start by saying this. I want to give you the encouragement that it's most likely not going to be a problem. It just needs to be tackled with that mindset in the beginning to carve out whatever explanations, and it may even require a supplement to the appraisal stating all of that information that I just shared. But brilliant question. I love the details. These are good ones because I get to brain flex a little bit, but I appreciate it, and I wish you well. If you need some help regarding that, or you want some more information, I would need to know a little bit more about the specifics of your circumstance to give you more detailed info. But it sounds to me on the surface that it's certainly worth pursuing, and I'd be happy to answer any of your questions. But thank you for that. Hey, let me throw it over to Dom, and we'll keep them rolling.
Jackson sent this text. I'm starting to see some hurricane damaged properties for sale on the West Coast. Can I roll the repair costs into a mortgage if I buy one?
Hey, Jackson, that's a great question. And yeah, we're starting to see, it's interesting, right? Because there are a lot of loan programs and strategies and opportunities that happen and are available anytime a hurricane comes through. And guys, if you've been listening to the show for any length of time, I was born and raised right here, and I've been through all of them that have that have hit in my lifetime in one capacity or another. So I always hesitate to start talking about the opportunity that exists post a storm because I take it very personally, right? I remember the last one that we lived through, and the roof came off of my house, and all the trees came down, and the fence was gone, and there was significant damage. And the first couple of weeks, you're just poking your head out, trying to get back to reality. We had to tarp the roof, and, we were without electricity for 13 days and without water for 11. So I always hesitate to dive right in there and start looking at opportunity, but we're seeing it. We're seeing a lot of questions around this. So I'm going to answer yours, and then I'm going to talk a little bit about some of the things that are available to people who are going to go buy distressed properties and people who own distressed properties and are looking for their next move. So great question. Depending on your intent to the use of the property, right? Are you going to buy it for your primary residence? Are you buying it to fix it and flip it? There are a couple of different strategies involving different types of loans that do, yes, allow you to roll the repair costs into the purchase. One is an FHA 203K, and then there are fix and flip loans for investors that are non-QM loan products. And they'll typically use what's called the ARV, after repair value. And with that number is where they determine how much they're going to lend. And a portion of that number is allocated towards repair costs. So to answer your question, yes, I would need to know many more details, but on the surface, what you're trying to accomplish is doable. And then back to the other strategy, and I'm just going to touch on this, and if people have more questions, I'll let you guys, kind of guide where we go from here. But there is an FHA loan program called a 203H program that is very, very underutilized, only because it's used for this exact reason, right? When there's a declared emergency, declared disaster, and very few people know about it, but it allows you to relocate to an undamaged property. So less of a, interest for you because you're thinking of going and buying damaged properties. But if you're stuck over there and you own a damaged property and you have nowhere to live, this loan product allows you to go buy a sound home in an undamaged area, unaffected area, and you can have access to the 203H program and move on with your life while you sweep that up. You don't have to have previously sold it. It's a super specific loan program for this exact thing. And then there are fix and flip loans, as I talked about, for the investors who want to go over there and pick up properties. Heck, there's guys that are advertising, "We'll buy your home for cash." I'm already seeing those ads, and they're going to do the same thing. They're going to buy it at a discount, assuming that the insurance company makes you whole, and then they'll fix it up and rent it or flip it, whatever their long-term intent for it is. But if you're in that situation and you want a cash offer on your property, I'm seeing a ton of people advertising that, and I'll be happy to. I'm not endorsing anybody because I don't do business with them, but I'll be happy to pass that information along to you. So anyway, you hear the music, you know what that means. That is my cue. We'll be back in 2. After this short break, we're going to continue with the Mr. Mortgage Show.
It's not every day that you need an appraisal, whether it's for a divorce settlement, estate planning, or maybe you're appealing a tax assessment, or you just want to make sure you have adequate coverage in your property insurance. When you need a certified appraisal, turn to my friends at SOFLappraisal.com. That's SOFLappraisal.com. Peter and his team have been appraising properties here in South Florida for decades. SOFLappraisal.com. And tell him you heard this on the Mr. Mortgage Show.
Here's another 5-star review.
As a realtor, I have a bunch of mortgage brokers to choose from, but I prefer to work with Mark and his Mr. Mortgage team. In this crazy market, there is no room for error, especially on the mortgage side. Mark's team moves fast, keeps everybody in the loop, and makes things happen. They always give my clients a great deal and take the time to walk them through every step of the process. When you're considering a lender, I encourage you to talk to Mark-eitel and the Mr. Mortgage team.
Hey, it's Mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, my name is Mark-eitel, and we are back, and you are back, and I hope you got another cup of coffee, and you're ready to keep this mortgage mayhem rolling. My name is Mark-eitel, and you're listening to the Mr. Mortgage Show, and you can call or text your questions to that anytime hotline, which is 855-462-7292. That is 855-462-7292, or you can find us on the web at mr.mortgage, never.com, mr.mortgage. And hit enter after you type that in, and we'll be right in front of you in the upper right hand corner, rather, of the page is the contact us box where you can type in your question. And as I mentioned, Dom is like an octopus back there running the board and answering your calls and getting your questions on the air. And I am going to throw it over to him. I know we've got a few backlogged over there, so let's do a rapid round of questions. What do we have, Dom?
Bonnie sent this one. Insurance costs are already out of control. Do you think premiums will jump again because of the hurricane?
Hey, Bonnie, I do think premiums are going to jump again. It was interesting because before the hurricane, 6, I think, of the 15 or so companies that are still insuring properties in Florida were either on the verge of or declared insolvent. So I'm a little concerned how many insurance companies we're going to have left at the other side of this. But I did read a report that Citizens has already come out and said that they are well funded. They'll be able to absorb this, and they do think even another storm could happen this year and that they would be fine. Post a second storm, though, that they would anticipate some type of additional charge for policyholders so that they could recapitalize their reserves. But that's a great question, and it's time will tell, right? We've had a lot of hikes of late, mainly to do with property values and replacement costs, but I do think more may be in the future after this one. So great question. Hey, Dom, what else do we have?
Danny sent an email. We own our home in the Farms Free and Clear, and I'm looking at a place in Tennessee for a second home. Can I get a better mortgage on the new place since I don't currently have a mortgage?
Hey, Danny, that is a great question. And if I'm reading between the lines, you're thinking because you don't currently have a mortgage, you may be able to get a primary residence mortgage on the Tennessee home. And I might be wrong, but by your wording, Better Mortgage Tennessee, I'm thinking that might be the case. So here's the thing. If you're going to, if it's truly a second home and it's not your primary residence, you're going to be subject to the second home loan parameters, which carry a slightly higher down payment requirement and a slightly higher interest rate. And that's due to the risk associated with any properties that aren't your primary residence. If you're asking, will it benefit you because you don't currently have a mortgage and you have more of the income available in that, nasty debt to income ratio that we always talk about, then yes, the fact that you don't have a current mortgage is going to allow you to qualify easier if you do the second home loan. Here's something to consider, and it's only to consider because I don't know your circumstances. I'd love to know your circumstances, and I encourage a call if you're open to it. But you could do a refinance of your current home. And I know it sounds counterintuitive because you do not have a mortgage on it now, and congratulations for that. But you could refinance your current home and pull the cash out to buy the second home. That way you're not subject to the down payment nor the interest rate that's associated with the second home loan. Or if there's enough equity and enough of a discount, if the second home is less than the current home, you could maybe even do an equity line and buy the second home with an equity line. And then you'd have an interest-only period for 10 years. And that may be beneficial cash flow-wise. So I only say that because the second home loan product as a second home loan has a higher interest rate and requires a higher down payment. And you may have some strategies available to you where you can access the equity in your current home to purchase that second home. But I hope that helps. That was a fantastic question, and I'm open to learning more about it if you'd like to talk. But hey, thanks for that. Hey, Don, what else do we have over there?
Here's an email from Peggy. My boyfriend makes more money than me, but I have a way better credit score. Doesn't matter who is the borrower and who is the co-borrower. He thinks he should be first.
Of course he does. That's our big Neanderthal, hairy-knuckled male egos, and we all have them whether we pretend we don't or not. So it doesn't matter, Peggy. Either one of you can be borrower or co-borrower on the application. You're going to use either the average of your middle scores. Hopefully his is over 620 and you don't need to go that route. But you're going to use either the lower of the two middle scores or the average of the two middle scores, depending on which loan product that you use. But, it's funny. We have this, and I chuckle. I didn't mean anything demeaning against you or your boyfriend, but as men, we want to be first on everything, Mr. and Mrs., right? And Dom and I were just talking about this before the show about, socially where Dom and I are of two different generations, and we were just talking about how socially there are different places in society where it's acceptable to be, that alpha male, if you will, and it's not in others anymore. And it doesn't matter. He can be the borrower and you can be the co-borrower, or vice versa. Same with the deed. It doesn't matter who records first on there, whose name is on top of the document. If you're buying it as joint tenants, you're both going to have, ownership, the same ownership, not one is going to outweigh the other. So, but yeah, you've got the credit, which is also not uncommon. Ladies typically are a bit more responsible, especially the younger ladies than the younger men, and are usually the ones with the higher credit score. But great question, and to answer it, no, it doesn't matter. Whoever wants to go first can go first. It doesn't change any of your ownership interests. But wonderful question. Hey, Don, what else do we have?
Looney is asking, is it possible to get a blanket mortgage on multiple investment properties? I'm wondering if this makes more sense than several cash-out refinances.
Hey, Looney or Lonnie, I don't know how you pronounce it, but you spelled it wrong, so we're going to call you Looney. So that's an interesting question. So yes, it is a possibility. It's not easy, right? Because you're collateralizing many properties, and then every time you sell one, you're going to do a partial release of lien. It matters if there are mortgages on those properties. There are a lot of moving parts around this, but we've done transactions where, 15 properties are collateralized by, a loan or a line of credit. And then as the line grows, you may have to put more properties in that bucket of collateral. Or if the line's going down and you're selling properties, you're doing partial releases of liens to move them out. Builders do it all the time, right? There'll be one blanket loan to build out the project. And then every time they sell one of the units, there's a partial release of lien issued by the lender, so that one house is carved out from under that blanket, if you will, and then it's sold, and it's in an individual ownership state, and then the builder keeps on moving through the project. So great question. It sounds like you are a seasoned investor. That's a complex one, and I'd love to talk to you more about it if you need more info. But hey, Dom, do we have anything else over there ready?
We do. Donald sent this one in. I have a reverse mortgage now, and I'm getting remarried. Can I add her to the mortgage? My former wife was on the mortgage, but she died 6 years ago.
Hey, Donald, that is a great question, and I'm going to need to know a little bit more, but to answer your question, typically no. And it came up last night Thursday night in that presentation that I did. One of the guys was joking around, what if I marry a 22-year-old? Can I add her to my reverse mortgage, and then she can live there until her death without any payments? And I told him, if you marry a 22-year-old, you're going to definitely be the one that dies first. But thankfully, he had a sense of humor to appreciate that. But typically, the answer to that is going to be no. Now, you can add her to the deed, which will allow her to, facilitate any moves that need to be made after your death, but usually the answer to that question is no. Now, that's not to say that the two of you together couldn't refinance your reverse mortgage into both your names with another reverse mortgage, and there may or may not be advantages to that overall from an estate planning strategy and obviously protecting her for the long term. So fantastic question. I appreciate that detail. That was a good one. And guys, one thing I want to throw out before we sneak into this break is, with a reverse mortgage, both the borrower and co-borrower are protected. So whoever goes first, the remaining spouse can live there until their death too, without a monthly mortgage payment. But you hear the music, and Dom is definitely jumping up and down back there saying we need to get into a break. So sit tight for 2 minutes, and we'll be back for more of the Mr. Mortgage Show.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Here's another 5-star review.
We kept our business above water with credit cards during the pandemic. I'm glad we did. Business is better than ever. But I didn't want to be a slave to those credit card payments. I called Mark about the REC loan he advertises. Long story short, we did a REC refinance and paid off everything, even the car. Now we only have the mortgage payment. We're saving a bunch every month. Yes, we are happy to recommend Mark and the Mr. Mortgage team.
It's not every day that you need an appraisal, whether it's for a divorce settlement, estate planning, or maybe you're appealing a tax assessment, or you just want to make sure you have adequate coverage in your property insurance. When you need a certified appraisal, turn to my friends at SOFLappraisal.com. That's SOFLappraisal.com. Peter and his team have been appraising properties here in South Florida for decades. SOFLappraisal.com. And tell them you heard this on the Mr. Mortgage Show.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right. My name is Mark-eitel, and you are listening to the Mr. Mortgage Show. And that's right. You can call or text. Ike always leaves that part out. Call or text 855-462-7292. That's 855-462-7292. And we will jump into your questions or at least get them on the air, and I'll do my best to answer them. But hey, I'm going to throw it over to Dom so we can keep your questions coming.
Jeannie is asking, where do I find the back episodes of your show? I went to the station's website, but I can't find the old ones.
I love that. Hey, Jeannie, call the station on Monday and tell them, we want the Mr. Mortgage Show. No, you can go to MrMortgageRadio.com. That's MrMortgageRadio.com. And at the end of each show, once it's over, Dom posts the recorded version of it up there. So all back episodes can be found at MrMortgageRadio.com. But thank you for that. Hey, call the guys on Monday and tell them I need the front parking space too, next to that sports car over there where the big guys get to park, because I'm out in the back 40. But anyway, I'm just happy to be here. So we've had some really good questions so far today. We've covered everything from rolling the costs of renovation and buying a distressed property into the loan. Talked about how fast Michelle can get out from underneath those landlord increases because, we all know rents are jumping. Hey, and Bonnie called about insurance rates. And let me throw this out there. I've been referring clients to a couple of agents over the years that have been knocking it out of the park. So if you have, serious questions regarding insurance and you'd like to maybe get a quote to see if you can save some money on your policy, or you're one of those unfortunate souls who've gotten the letter saying you're going to be dropped, you're not renewing this time, give me a shout, 855-462-7292. I'm always happy to put the hands together. I can get you in touch with somebody who can give you some pretty aggressive quotes. I'm always impressed with what they can do. I know they can't do everything, but I've seen some, I don't want to say miracles, but surprises in some, relatively affordable insurance rates. But hey, guys, thank you for your questions so far. And, you hear me ask this at least once an episode. If you enjoy the show, if you find any of this interesting, if it resonates, if there's value here, I'd love for you to share it. We all have those people in our life, our friends, our family, our coworkers, that guy at the end of the breakfast bar or your drinking buddy at the VFW who's thinking, man, is it a good time to sell? Is it a good time to buy? If you hear anybody who has questions regarding, buying or selling or refinancing, please introduce them to the show. I'd love to answer their questions. If they need help, I'd love to help them. But MrMortgageRadio.com is where all the back episodes are, or you can find us online at Mr.Mortgage. That's Mr.Mortgage.com, or just give us a shout during the week, 855-462-7292. And I'm going to throw this one out there because I read this question and I was going to skip it, but I'm going to address it because we have a second. The fact that all these mortgage companies are closing, right? And what makes this time different? Because that was a precursor to the crash last time. And that's a wonderful question and a fantastic observation, but there's a huge, huge difference. So the mortgage companies that went out of business last time were primarily the companies offering subprime loans, right? Those risky, low credit score, stated income, stated asset loan products. Well, what happened was they got caught in the middle. They were holding the bag. They had written all these mortgages, and then there was no liquidity in the secondary market for them to sell them. And in our industry, we were watching this thing called the implodometer every day. There was another company being added to it that was closed. This time around, the mortgage companies that you're seeing in the headlines that are cutting back or closing, they primarily feasted on the opportunity of refinances. So all of these little shops popped up, big shops popped up that were essentially call centers, because for the first time in history, every homeowner in the nation was a potential mortgage customer, because you could call up and say, you have a rate in the 5s? Do you want a rate in the 3s? Boom, you're refinancing. Those guys are out of business right now because that business is not there. It's left for the purchase mortgage specialists, as well as, don't get me wrong, we're still doing strategic refis. But those are the people you're reading the headlines about this time. So I'm hanging in there. I'm believing my job will be here next week. I know Dom and I will be here next week to do this all over again. But guys, you hear the music. That means we're at the end of another week. Man, it goes so fast. We have so much fun with you. If you need us during the week, give us a call, 855-462-7292. That rings to my office during the week. Or the website is Mr.Mortgage. That's Mr.Mortgage.com. And lastly, check out MrMortgageRadio.com, MrMortgageRadio.com. There you'll find all of the back episodes of the show, as well as the podcast. With that being said, Dom and I are going to grab some Jim Beam and head on off into the sunset, but we will be back next week, same time, same station. Have a great week.
That's a wrap. Join mark-eitel next week for more thrilling, edge-of-your-seat discussions about real estate and mortgages right here on The Mr. Mortgage Show.